Alright guys, welcome back to another video. This is going to be a quick video going over exactly where I place my stop loss on every single trade that I take. Obviously this is regarding to my own strategy. This can be different from anyone else, but this is just where I place my stop loss, and I'm going to go through some live examples of the trades that I took live, or a trade that I would have taken and where I would have placed my stop loss on that trade. So quickly, I'm going to go through just a few stocks with some live examples, and I'm going to go through Wolf, which is this recent trade that I took this week, back on Tuesday, I believe, Tuesday or Wednesday, is when I took this trade. So obviously, right, I'm finding and identifying exactly where I'm placing my stop loss ahead of time. Ahead of before I take the trade. So anytime I'm taking the trade, I know exactly where my stop loss is at before I take the trade, obviously, right? So let me go through exactly where I would have placed it, right? So we'll go through, actually wait, the next day. So this is exactly the setup I was watching on Wolf, right? We can see a nice little flag here off the daily chart, right? Key level here at 14.2, which is this previous 2 days high, right? The inside day candle here, and then some resistance from the few days prior to that, and then some key levels back in the earlier part of December, right? So that's exactly where I identified where I wanted to take the trade, because that's first, right? You want to identify where you take the trade first, and then as soon as it gets above that level, and as soon as you are about to take the trade, you want to know where your stop loss is at. So let me go through exactly where my stop loss is at intraday before I took the trade. So here is the Wolf. I think I have to go through. Okay, here's the pre-market or the aftermarket, and then the pre-market session real quick. I don't know why I did that. So here we go. Okay, here we go. So this is the day I took the trade. Obviously, we're waiting for 5-minute closures over key levels. Obviously, we see price push above that. Never closed above it, didn't take it. Again, right? Price broke above it, didn't close above that key level. Not going to take it yet. And here is when it exactly breaks above that level, right? We see a huge 5-minute candle here. Super bullish candle, close above that key level. That's exactly where I entered my trade, right? We aren't too extended from the moving averages, so this is all A plus to me, and that's exactly where I took it, right? Where did I place my stop loss from here? It is at low of day. Always on breakouts am I placing my stop loss at low of day. I'm not going to say always, because there are some situations where, and I'll show you in the other two examples, where these stop loss at low of day would have been too big of a risk. But in this case, right, since we aren't too far away from low of day, this is a perfect stop loss to have your trade be on, right? So, and the reason why low of day is where you place your stop loss is because anything below or anything above the low of day, the trade is still validated, right? If you end up taking it here and it comes back into drawdown, it gets below that key level price that you entered on, it's still validated, right? It's still chopping underneath that spot that it can eventually break back out and continue, right? If it hits low day, majority of the time, that trade is basically invalidated on the breakout. So that's why low day is the best stop loss you can have. But I'll show you some examples of when to not put your stop at low day. So this is where I put my stop loss at, and then you can see, obviously, take profits are something you have to mark off as well on the daily chart, but that's for a different video. And then this is where you take your, right? So I took trims at this point. Once I get 20 to 30% is when I first take a trim, and I'll put my stop loss at break even, meaning whatever my price I bought the contract at is where I put my stop loss. But at this point, I think I've already had my trims taken, so I'm putting my stop loss back at break even, right? This is just according to my strategy. You can keep it to where, you want to see a 30-40% return before you put your stop loss at break even. It all works out, but for me, 20 to 30% is enough for me, and that's exactly when I take my first trims, and I'll put my stop loss at break even. So after we get that first big push and I already taken profits, I like to have my trade risk free. And you can see later in the day, I think it ends up closing at the highs here. Yeah, so we kept going all throughout the day, and I'll put it on the 15 so we can go quicker. You can see we ended up ripping, and then bam, we closed at the highs with my stop losses still at break even, right? And then the next day, I believe we ended up coming back down and hitting my break even price. And what I mean by that, right, is we'll see here. So I think in this one of these 3-4 candles here, it never ever hit back on that 14.3 spot, which that is not what I mean by taking stop losses at break even, right? My break even is literally at the price of the option I bought it at. So even though it never hit that spot again, my contract still hit my break even spot down here, unfortunately, but it happens, right? It ends up playing out anyway. It would have stopped me out eventually the next few days, I think. So regardless, it was a great trade, and it would have stopped me out this day, I believe. Yeah, so they would have stopped me out regardless, right? And I would have lost even more money. So keeping my stop loss at break even, risk-free trade, means I can no longer lose that trade no matter what happens, right? So that was that first trade, and that's exactly where I placed my stop loss. Second trade, here is a trade where I would have taken on Friday, but the stop loss would have been the stop loss at low day would have been too big of a risk. So let me show you exactly how you could have taken this trade. So I'll show you here. So I think, wait, let me go through. So I'm gonna go down to the 15 here. So here is exactly, is this Friday? This is Thursday, okay. So this is the Thursday's candle. Let me scroll through this real quick. Okay, here we go. Pre-market. All right, here's the breakout here. This, obviously, I'm trading on the 5 minute most of the time. So let me select the bar. So this is when it eventually broke out and held that key level, right? Which is why we're watching that spot, right? Is that previous high day, and that would have been the breakout spot. But why would I not have taken this trade with my stop loss at low day, right? It's because this is too big of a risk, right? The stop loss all the way at low day with the contracts I'm most of the time buying, which is 1 month to 2 month out in expiration, this is too big of a stop loss. This would be more of like a 30-40% loss, maybe 25-30%, right? This would have been how much the stop loss would have been, which is too much for me, right? For my strategy, right? Since I'm taking profits most of the time at 20-30%, having a 30% stop loss just wouldn't make sense. You want to make sure when you're taking a trade, it's like your stop loss is here, or you're entering in there and your stop loss is that big, right? But in this case, this is just way too much of a risk for me. That's why I either would not have taken the trade, or I would have moved my stop loss up. The only case of moving your stop loss up, or the only problem with moving your stop loss up, is that even if it comes back down and hits your stop loss here, the trade is still validated. And that's why most of the time it's a little bit more difficult to take something when it's too extended and you move your stop losses up. But you can still do it, because like I say in every video, you can always re-enter a stock even if it stops you out as quick as possible, and it's still validated, right? So if this thing would have came back down, if I entered and hit my stop loss here, even though it's not low day, it's still validated and I can re-enter it if it gets back, right? So that's the case, right? I'm not going to always put my stop losses at low day. I will either move it up, right, and take a riskier trade, and willing to lose regardless if it's still validated or not, right? So that's what I would have done. I would have moved my stop loss up if we break back below it and we just weren't able to hold that key level spot. I would have just taken a loss and just waited to re-enter if it wanted to get back. And obviously you can see the rest of the day, right, it ends up holding that spot every single time. Came back down again, held that spot, and we ended up ripping. So this would have been a great trade regardless. This would have been something I would have maybe taken with some light size, or I just would have taken the trade. And that is where I would have placed my stop loss. Obviously, there's some situations you can't have your stop loss at low day. Here's another example of a trade I took on Iran a couple days ago. Start new. So I took it on this day here. So I was watching Iran, where we had some low volume, after a breakout, we had the low volume pullback to the moving averages. And obviously this is at the point where I've been noticing we've been actually not having a lot of breakouts happening, right? Breakouts were kind of losing momentum, and we're getting a lot better trades, kind of getting the undercuts near the moving averages or near some key levels, right? So this was a key level here, since this was that breakout spot. And then we saw the first time it undercut, it ends up reversing and closing, higher than the key level, and then end up ripping the next day and then coming back down. So that's why breakouts weren't really, working, is because we saw a lot of momentum getting lost at that point, and we're seeing a lot more momentum on the trades getting under the key levels or the moving averages. So this is when I took Iran on 123 at around 9:28 a.m. So let me drop down to the 5. So we'll see, actually I took this on the 15. So we'll look down to the 15. You can see this is that big key level here, right? We saw it right down at 52. You can see this is some support here, support from yesterday, that prior day. There's that low day, and I'll show you exactly why I took it and where I would have put my stop loss, or where I did put my stop loss. So we saw it break through, right? We saw it come back and it reclaimed that low of day, right? It reclaimed that key level. So a lot of people that came in short here on this breakdown of this candle are basically getting trapped at this point. And that's when you see a lot of explosive moves, is when you get one side of the market getting trapped, right? And that is where, this is what happened here, right? A lot of shorts got trapped here. So they're now in a position where they probably need to get stopped out. And that's where you see a lot of explosive moves. So that's where I took my trade as soon as we started reclaiming that spot. And then my stop losses goes at low day. And the reason it looks like it's a big stop loss at this point, which it really wasn't, right? We saw a bigger return as my first take profit, right? So the first take profit would be at that previous high day up here. And I'll mark it off so you can see this is the previous high day. So this was almost a 2.5 to 1 risk reward, which is why it was worth it, right? And this would be something you would take with month out and expiration, and this stop loss down here would not be that much, right? There's just some stocks that have higher ADRs where even though this looks like a big stop loss, it really would not be a big stop loss if you take month out expirations on some types of stocks. So this is where I would have put my stop loss at low day. The trade would be invalidated if it got to that point, and we can see the rest of the video, it ends up ripping. And at that point, right, obviously taking trims along the way, this is obviously an area that, or in this big move to the upside, there's points where you probably should take profits on. And so as soon as it hits that first take profit up here at 56, that is where you want to put your stop losses at break even, right? Obviously you can still trim along the way, but at that point is where you want to put your stop loss. As soon as you hit that point is when you want to put your stop loss at break even. And then the rest of the day ends up ripping, and we ended up making some money on that. And then the next day it would have stopped you out. So the next day it would have stopped me out, I think, at one point. So yeah, so at this point it probably would have stopped you out eventually. It came down here or something, and then later in that day, yeah, there you go. So it would have stopped you out on the rest of your contracts, because you're keeping your stop losses at break even after, and keeping your trade risk free. That's the key of the game for me. And then what's another one? Okay, here's a trade that I took a loss on. Stay. So I took it on this day here. So we started seeing a key level at around 102, right, which is where I wanted to take that trade on that breakout of this base here. We saw the stock consolidating under that spot, so I was waiting for that key level to break, and I'll show you exactly where I took the trade. And this is where I had my stop loss set at a different spot, right? I moved my stop loss up, and it ends up helping me, right? Because it did end up failing. So here you go, right? We saw a big key level resistance here, and we broke out of that with a lot of volume. This is why I ended up taking it, right? Obviously, I didn't take that first initial push, but we saw the next 15 minutes with some really low volume. This is all A+ to me. Showing some support here. You can see the wicks, ended up taking it there, but obviously this is too big of a risk to have your stop loss at low of day. So where do I put my low day at that point? That is just me moving it up and keeping my stop loss, at a specific point where if I see a 10-15% loss, I will most likely end up taking that out, right? And because that way I know if it ends up coming back, I can retake it. If I take a 30-40% loss and it comes back up, I don't know if I'm going to be comfortable taking it after already taking a big loss like that. So you either want to risk super small if you're only comfortable putting your stop loss way down here, so you know just exactly where to have your stop loss instead of having to guess whether you put it up here or down here, then you want to either take a size according to that, right? So in this case, it would have been a super light size. This would be something like if you take $1,000 in trade normally, you would only want to take like $200-$300. But for me, I'm gonna stick with my same size, just move my stop loss up, right? So I would have put my stop loss around this level. If it wasn't going to hold this key level, then I would just not want to be in this trade at all. So this would be something you just got to have, different types of conviction in the trade, or kind of just different thought process. So we can see it ended up actually failing to hold it, and it stopped me out as soon as that, right? As soon as that happened, it stopped me out for like 8%. So obviously still with the same expirations, right? All the contracts are a month or 2 months out. These stop losses stay small, right? and then it ends up coming all the way down to break. Actually, it never really broke down out of your key level here, which let me show you if you would have just risked really small and had your stop loss the same. So this is where it actually ended up. Watch this. So if you would have had that there, your stop loss at low day, you'd be in some big drawdown, obviously, but you're risking pretty small, so you're not too uncomfortable with the trade right now. Let me show you exactly what happens the next day. So that's the pre-market, so it doesn't count. Ends up coming back, and here's the next day. So yeah, ends up coming all the way back and ends up ripping the rest of the day. So this would have been a trade you would have won on, or would have been winning. You probably wouldn't have taken any trends on that, but ends up coming back obviously the next day. But for me, that would have been something you could have re-entered on and then take the win on, right? You could have re-entered on this day after only taking a 10-15% loss, and then re-entered it and made another 30-40%. So your win-loss would have balanced out, right? Better on the win side than the losing side. So that would have been a trade that you could have taken again. Obviously, I didn't take it again. I kind of forgot about this trade after I lost, and then I just never looked at it, the stock again. So that was that trade. And let me go through one more. TSM. This is a stock I took a loss on a while ago, and this is back here in December. I think it was like this. I think it was here. Let me see. Okay, we started seeing some resistance here, or some big key levels here, around here. So I took the trade around this spot here at around 292, big key spot here. And we can see I'm gonna drop down to the five minute chart. So we gapped up. Actually, I don't remember taking this, to be honest with you. I don't think it was this one. I think it was, or maybe was it a different day? I don't remember taking this, but let me just go through it. Let's see if it ends up playing out anyway, and I can just give you an example. Oh, it might have been the prior day. Hold on, sorry. So it was that prior day, I think. I would have taken it and gotten stopped out. Yeah, it would have been that prior day. So let me go back, stay, select a bar. So this is the day I would have taken the trade, right? So we see some key level here at 292.5, right? Big key level. This is where I would have taken the trade, above that spot here. And if we drop down to the 15, we can see exactly where the stock was, right at pre-market as well. So that's another key level. Perfect. Ends up holding it, and then we broke above it now, right? Obviously, we're on the, I don't know why I'm on the 15, but this is the 5 minute chart. We broke out of that level with some volume. I would have entered this trade, and this would have been a great risk reward trade, since the low of day is just barely down, right? It's right here, and I'm obviously targeting, up here, 300, whatever. So big, a great risk reward type of trade, exactly what you want to see. Ends up obviously coming back down eventually and hitting your low of day, right? Stops you out. I think I took like a 8, 9, 10% loss on this maybe, and then yeah, that was the stop loss on that. So that's exactly where I put my stop loss on that trade exactly. And those are the examples, I think. Yeah, those are the only 5 stocks that I had examples on. Obviously, there's plenty of more, but that's exactly how you keep your stop loss super small and have your winner say really big, because you're putting your stop loss according to the trade, right? Obviously, majority of the time, it's the low day, super small risk with high reward, and that's why you're able to have big winners and keep your losses super small. You always, when it breaks through low day, you want to take your stop loss. You don't want to keep holding it and just wishing it comes back up and hopefully it comes back up later. Nah, respect your rules, put your stop loss in, and that's how you stay in the game. Peace.